macro video now, do a market video a little bit later. And just so you know too, this isn't a call for this week or next week. I'm talking bigger picture here. So three things are happening, and these five cities are going to be absolutely destroyed when we go into our next economic depression, and they're likely to be a cause of a lot of it. And the changes are going to be pretty profound. So I'm going to start off with Seattle, and you got Amazon, okay? And Amazon is now in the crosshairs. It's a company that's been really very parasitic. Blockchain technology, weak consumer, and regulatory environment is going to destroy this stock. Plus, it's just way overvalued. You got Starbucks, dead consumer. You got Microsoft. Again, the technology boom is over, and they're going to suffer for this, and they're going down. These are all 20% down plus stocks. Okay, so Seattle's in big trouble. Then we move over to San Francisco, and they have a 2-4 problem here. So you got biotech. You see what happened with Humana and Walmart. There's a change going on here, guys. It's healthcare is basically eating everything. And companies are now starting to push back, and they're getting pretty creative about this. And they're going to start eating into these companies and their margins. A lot of these companies, 40% of biotech companies don't even make any money as it is. A lot of them are concentrated in the Bay Area. Some are in Boston and some are in Southern California. But look at Celgene. Look at AbbVie. Look at Gilead. This isn't changing. We're going to get dead count bounces on all these things up to the VWAP, and then they're going to roll over hard. People aren't going to pay this. People can't. I mean, how many people, they're making $40,000 a year and paying $20,000 a year in health insurance? It just doesn't work. Okay, so that's one part of San Francisco's problem. Here's the other part. Social media is dead. They say fraud, click fraud is 28%. Advertisers are scrutinizing like crazy now. Government regulations are coming into this thing too. Check out Google. All these stocks are rolling over now. They're not making new highs. This is all over. You got Facebook and Google. You got the biotechs, and then there's just a whole plethora. That whole area. San Francisco is already unaffordable. Not a good sign. Now we just keep rolling on down into LA, and you got Hollywood. Okay, and again, people have money. You know, my daughter has an annual pass, and only way she gets it, she'll be able to make a price cost, ROI for her, because she'll go 20 or 30 times. But these things are between $500 and $1,000, and you can only get on 3 or 4 rides a day. I mean, people are idiots for going there. It's my daughter's money. She's a teenager. She's gonna have fun with her friends. But my wife and I, we haven't been to Disney in 20 years. So I take that back. I lied 2 or 3 times when my daughter was little. But you get my point. There's nothing there for people anymore, and it's just so damn expensive. And that's just not it. Here's the other thing that keeps. LA alive. Real estate. Real estate's still pushing up here a little bit. People are coming down from the Bay Area, but people are going to leave LA and start moving into Orange County and San Diego, or they're moving out of the state completely. And between real estate and Hollywood starting to suffer, and there's biotech here too. It's going to be tough. California is going to be a tough place to live in the next 2 to 3 years, because most of the revenue that the state receives is from capital gains tax, high income taxpayers, and property taxes. And it's just going to get destroyed, and they just keep bringing in more and more people who are just feeding off the gravy train. It's not going to be a fun place to live, and I'm stuck here. But we're not done yet. Let's go over to Chicago. Okay, so these guys, they've been suppressing the grain markets. We're starting to get a bid there. Money's moving from the coast in. Money's moving from fake to real. Okay, money's moving from financial assets to commodity assets. Okay, so we're going from the coast in. But Chicago's the exception to the rule. Here's the other thing that sits inside of Chicago. Okay, Boeing. And Boeing's been on a tear. And I think they're going to start suffering with the trade wars. And so Chicago's in big trouble, and they can't pay their bills as it is. Just wait to see some of these things start rolling over. Not a good sign. And then the city I really think is going to be in huge trouble is New York City. Its whole reason for being is basically to steal money from a spread and have free money from the Fed. And that's going to go away, and blockchain is going to kill it. I don't care if you call it coins or no crypto. People are not going to pay the spread for something that shouldn't cost anything. And they're just going to go right around the banks. And they're in big trouble. And they're going to get toxic. And they're going to lose money. And they're going to pull off some other kind of game. And they're not going to be able to get the money that they need to free credit. Because the Fed will be under enormous political pressure not to do it. And so New York's in big trouble. And then finally DC is that, let's see here, which one do I want to do? I'll just do this one here. Here's our dollar, okay, rolling over, okay, deficits out the moon. A lot of attention to be placed on Washington, D.C. So these are the cities. If you're in these cities, you know what? Your real estate has hit the top. Okay, your states have probably reached peak revenue. There's going to be a lot of disruption in these states. So, and you know, and it's funny, if you ever notice where liberals live, they live where they can create these monopolies and these moats. And then they pontificate about why capitalism doesn't work. Well, they cause it, and they try to get their cake and eat it too. So Seattle's in trouble, San Francisco's in trouble, LA's in trouble, Chicago's in trouble, New York's in trouble, Washington's in trouble. And they're all for secular reasons. Okay, we're moving to the blockchain. The healthcare industry is going to be under tremendous scrutiny. Social media is over. They better start working on Internet 4.0 because that ship has sailed. The ad revenues are gone, and they're not coming back. And people are going to start really scrutinizing their spend, and people aren't going to open themselves up to their demographic information to Facebook and have people basically advertise to them and knowing everything about them. So anyway, I just want to put food for thought in your head here. So bottom line is, on RIPS, short biotech, on RIPS, short real estate, on RIPS, short social media, on RIPS, short banks. Okay, go long cryptos, go long grains, go long silver, go long gold. I think that's going to be the theme over the next 18 months. Thanks for listening, and I'll do a market recap later today. Bye-bye.